Hello everyone, welcome back to another episode of Market and Macro Moves by Emkay Global Financial Services. Today, Mr. Yatin Singh, who is the head of investment banking, is back with us for another round of interview. So without wasting much of the time, let's get into the questions. Hello sir, how are you?
Doing well, how are you?
Great. So in the markets recently, what we have seen is that it's been only 5 months into 2024 and the companies have already raised 27,000 crore plus funding through IPOs. And this number was actually 49,000 crores last year and 59,000 crore the previous. So looking at this rate of fundraising, what do you think this is going to end at 2024?
Well, I mean, if you just were to extrapolate the 5-month number, seems like we will beat 2022. That said, markets are dynamic. We have a very large meta event in terms of election results, which is due soon. The expectation is continuity, but you never know. Should there be an unexpected outcome there, that may have a temporary impact on markets leading to turbulence. It will settle down because ultimately markets reflect the underlying macros, and India right now is doing reasonably well. So just to summarize, seems like we'll do better than 22, but you never know.
Also, India growth story, it's everywhere in the market right now, and also globally, there is a lot of buzz about India growth. So what's your opinion about it? And how do you see this growth story is going to impact our IPO market?
So, IPO markets, primary markets are closely correlated to secondary markets, which in turn reflect, as I said, the underlying health of the economy. I'm not a microeconomist, but India seems to be doing very well from the numbers and the commentary that we get. If you couple that with political continuity, then the case for strong economic performance leading to healthy secondary markets seems logical, and that positivity should spill over into the primary markets, right? So the expectation is that the macroeconomic performance of the country will translate to healthy primary markets. The other important variable here is flows. The monthly SIP flows in mutual funds are holding up reasonably well. It's a function of the surpluses that households generate after their monthly expenses, and also a macro trend where we are seeing financialization of savings, where households are now investing their savings in capital markets and not necessarily buying gold or real estate, right? So if you triangulate all these factors, it is not a very optimistic call to say that primary markets will do well.
Got it. Since we spoke about the flows, especially the domestic retail investors, which we spoke about, also there is a trend which we are seeing in the market about the FII flows. So we have seen money outflows from FII side in the secondary markets lately. So do you think that these FII flows are going to impact our primary markets in any way?
So the answer is no. Let me explain the FI part, right? So FIs as opposed to DIs, the investment options they have are much larger because they can invest in multiple countries. Indian markets are expensive. There is no, two ways about it, right? They are expensive. There are so many stocks which trade at more than 100 XP, even more trade at 50 XP. Those are expensive multiples. Now, I'm not one to question the veracity of the markets. I'm sure there are underlying demand supply dynamics which is leading to that valuation. But when an FIE decision maker evaluates Indian markets, whether vis-a-vis some other markets, he may find something else where the risk-return trade-off is better, right? And of course, markets have done well, so a lot of those FIs are sitting on profitable positions. So it is not, strange for them to unwind those positions, take money out of India and redeploy it somewhere else. That's par for the course. I think Indian markets in general and primary markets in particular now are increasingly being driven by domestic investors, whether it's institutional investors or retail investors. Of course, in IPOs, you look at the anchor list of most of the recent IPOs, you'll see a significant skew towards domestic investors, right? So FI participation, of course, is the cherry on the cake, but I don't think that's going to materially impact the outcome of primary markets this year.
So let's get back to our India growth story. Do you think that there are any specific sectors which are going to be, positively impacted because of the current trend of this story?
Of course. So even if you look at the macroeconomic approach of the government of the day, and here the assumption is that the election results will translate into continuity, right? If that changes, then we may have to revisit this question. But assuming that happens, this government has very clearly demonstrated a capex-led, deployment and macroeconomic, growth strategy, which means anything which is around infra, cap goods, metals, anything that goes into creation of hard assets, by and large, we'll see strong tailwinds. And we've already seen that happening, right, in the last few years. Then there is increased focus on, making India a manufacturing hub across different segments, whether it's auto, pharma, EVs and stuff like that, right? So there it's a performance linked or rather a capex linked incentives framework, which, is pushing investments. So by and large, if you look at most cohorts, most sectors should do well. Some will definitely do better than the others, right? Because one of the things that is yet to play out fully is consumption, right? There's a large part of India where there is a perceived, still lack of recovery post-COVID. So as the rural India, suburban India also catches up with urban India, in terms of income growth, you would see a significant uptick in consumer and consumption-based business themes. So that aside, I think most sectors are poised for growth. Of course, some will do better than the others.
So ideally, it's going to be the capex-heavy sectors.
Capex-heavy sectors or sectors where there are focused schemes from the government to foster investment in India, right? So if you look at a macro outcome of all of this, you'll see a lot of manufacturing-based companies, small companies, IPO sizes of sub 1,000 crore going public, right? Because these companies are seeing significant tailwinds in terms of the macro and the policy support that they are getting from the government. And that is translating into a lot of growth. Growth, of course, needs capital. A lot of it will come from debt, but some of it, requires equity as well. And that is why companies are going to the markets to raise money.
Got it. So, do you think that now that there are elections on the way and post-elections, do you think that the smaller companies which you are speaking about, maybe smaller and mid caps, will there be a specific rally in these companies and will there be some specific interest, renewed interest from especially small and mid caps?
So, I don't think even at the current levels, the interest in small and mid caps can be categorized as subdued. Well, look, interest levels between large, mid and small cap is a function of a lot of variables. Some of these smaller companies actually are quite expensive, given that their float available is limited given the overall market cap of the company, right? So, I don't know, is my response. It could be, but if you were to ask me, I'd rather find more confidence in large caps rallying faster than the small and mid caps, because of late, large caps have kind of lagged the small and mid cap rally. That doesn't mean that the small and mid cap companies will see a correction in their stock prices. All I'm saying is on a relative basis, maybe large caps will do better.
So in these kind of markets, especially with maybe election results due in next 2 weeks, 3 weeks or so, how do you see the sentiment among promoters of the companies? and also at the same time the investors, be it private equity investors or the institutional investors.
So I think most promoters are pretty bullish on the India story right now. I guess most of them are also assuming political continuity. I think that's a strong assumption. From the data that we get in the media, it seems like that the results will play out to the expectations. But again, we have to wait for the event to transpire. Assuming that the political continuity is in place, most of the policies of the government will also continue, in the way they have done in the past 2 terms. All of it means fostering investments. Government, by the way, has done a lot of heavy lifting, and I think we are almost nearing that point where private capex should take off in a major way. I mean, we've been talking about this for a long time, but there is serious capacity utilization levels that the country, a lot of industries, a lot of companies have achieved. So you should see private capex. What is happening on the new energy side, whether it's solar, whether it's battery technology, all those, whether it's hydrogen, all those sunrise industries, they will reach that inflection point where you will see a lot of private capex. So I think promoters in India should generally be bullish. Of course, there may be certain segments, certain industries, which may be for their own specific reasons going through certain turbulence. But by and large, if you look at the state of the country, majority of the promoters should be pretty bullish. Private equity investors, of course, I think they mirror the macroeconomic sentiment. The healthy thing for private equity investors is that capital markets have now demonstrated enough appetite for private equity stakes when they get offered in IPOs, right? So for a PE fund, it's not just finding the right opportunity, it's also having a well laid out exit path, right? And capital markets for growth stage investments happens to be now a very well accepted, well tested route for exit. So I think private equity investors will also be very happy about that. Public investors, of course, right? As I said, they directly mirror this macroeconomic sentiments. So institutional investors will continue to be positive. That positivity, of course, is also reflected in the monthly inflows they see in their SIP contributions, right? So unless we see a material downturn there, see a couple of months here and there, that kind of volatility can happen. But if on a sustained basis for 6-12 months, we see a downward trend in the monthly SIP contributions, that is when one should revisit these assumptions. Otherwise, I think we are in a good place.
Mm-hmm. So what is the perception about valuations in the market right now, and what do you think about it? So are they quite expensive, or are the markets at reasonable prices? How is it?
As I said earlier, there are pockets of frothiness.
Okay.
I mean, 100 P in a company in a traditional sector, not even a new age company like a Zomato or Policy Bazaar or Mamaearth, it requires significant compounding in earnings to deliver a certain return to investors, right? But again, it may be a function of an interplay of various factors, some of which are supply based. And in some sectors, where there's high investor interest, there are a limited number of listed companies, and then that reflects in the premium they fetch. Also, as I said, India is witnessing this inflection of household savings moving from gold and real estate to not even bank FDs but public markets, right? Which means that there is enough flow. What that means also is that the expectation of return on equity investments, of course, it has to substantially beat the bank FD returns, but it may come down and stabilize in mid-teens over a period of time, right? And if that happens, then some of these multiples will justify themselves. But yeah, broadly speaking, there are pockets of frothiness. By and large, I think at least large caps in India, if you look at historical levels, it's not that they are significantly overvalued. If you consider the interplay of geopolitical factors and India's own standing within the global geopolitical dynamics, the China plus one, bunch of other things happening, and our internal policies, a long-term growth in earnings can be justified Of course, there'll be turbulences in between. With that being the case, and not a lot happening around in other major geographies in the world, you know, these valuations are an outcome of those realities.
So, sir, keeping in mind the entire growth story going behind each and every sector, and also the current opportunities for each and every sector, we have a small list of sectors, and let's do this like a rapid fire round. So I'll tell you name of a sector, and you just tell us in one word what's your view about it, like be it subscribe, unsubscribe, or neutral.
Look, a disclaimer. I think given where India is, it will be very hard for someone to give a unsubscribe rating to any sector, right? So my response will vary between neutral and subscribe.
Yeah, sure.
Go ahead.
Let's start with it. First one is energy and utilities.
Definitely subscribe.
Consumer goods and
Neutral.
Okay. So is this because about the consumption uptake?
So as I mentioned, yeah. So there is a part of demographics in India, more rural, where recovery from COVID is still happening. The government welfare policies, other benefits, direct cash transfers, of course, cushion them against any severe shock. But discretionary spending is yet to take off in the way it is happening in the other part of India, which is urban and more services based. I think that should catch up soon. Okay. But till that happens, I guess one will have to wait and watch. So I'll go with the neutral.
Automotive.
Definitely buy.
Okay. Financial services.
Neutral.
Real estate.
Subscribe.
Infrastructure.
Definitely subscribe.
This is because of
the government push. Yeah.
Okay. Technology.
Neutral.
And
I'd like to elaborate that. So, of course, when you talk about technology, it's now a wide cohort. There are traditional firms like TCS and Infosys where their business outcomes are a function of the macroeconomic sentiment in developed parts of the world, US, UK, Europe, and they're going through their own, growth pangs. That's reflected in the performance of these companies. But then there is another cohort, which are businesses which are technology-led, but not necessarily traditional services the way we knew them. It could be ad tech, it could be fintech, it could be a bunch of other things. Some of those are doing very well, right? So I'm saying that, but yeah, their market caps may be much lower than the very large listed IT services companies. So aggregate neutral.
And the final one is telecommunications.
Neutral.
Neutral. Okay. So, sir, nice chatting with you today.
Thank you.
And
thank you,
thank you very much for your time.
Thanks, Bhargav.
Definitely, these are very much informative sessions for us and our users as well.
My pleasure. Thank you, Bhargav.
Yeah. Have a good time, sir.
Thank you. Bye.
Thank you, everyone.